Well, welcome everyone, and thanks for joining us again for our third session of the FBAA 2020 Commercial e-Masterclass brought to you nationally. Now, this e-Masterclass will run over the week, as you all know, with different content coming to you each day from experts within the commercial lending space, and you'll get tips on the best practices, of course. The content will really assist you to diversify or thrive with the commercial lending to assist your clients coming out of the COVID-19 period and planning ahead for future scenarios. And we want you to jump onto the FBAA website and click on the upcoming webinars to register for any other sessions or the live panel session, which I'll be hosting on Friday, 24th of July, of course. A few housekeeping matters before we get started. There's a 0.5 or half CPD hours allocated to today's session. However, please ensure you stay and watch throughout the whole session to ensure your attendance is marked, and then you'll receive an email following the session with the CPD code and feedback survey to complete. A huge thank you to our sponsors. We have our platinum sponsor, Lend, who you'll be hearing from later today, and our MC sponsor, Speedy Finance, as without these good people, we wouldn't be able to put these great shows on. You'll be receiving their contact details following the sessions, so please make sure you make contact should you have any further questions. Then there are the content presenters who have given up their time to compile this information to assist you throughout commercial lending and within these trying times, and they certainly are trying. Please also refer to the Industry Commercial Masterclass ebook that you can download as a PDF from the FBAA website, which outlines all the presenter details and other company info. The agenda for this week and other beneficial information will be there, and you'll find it there in that important book. So let's get started. I'd like to introduce John Kolyvas from ING. And John's going to be talking about submission writing with a CV-19 or coronavirus 19 tweak, and commercial client interviews as well, research and preparation. Take it away, John.
Thanks, Peter. Hi, my name's John Kolyvas. I'm the National Sales Manager Commercial for ING Bank. As part of my session today, I'll be doing a presentation on commercial discussion papers and submissions. I suppose it's a bit of a skill that a lot of specialist commercial brokers have fine-tuned over a period. And I just thought it was a good area for everyone to get a bit of insight into the sort of the do's and don'ts and the best way to put together a paper when you're presenting a commercial application. So look, we'll start with the first slide. And I know you've probably all seen this before, but I thought it's worthwhile bringing it up. You know, the 5 C's of credit, and you might say, well, you know, why is that important? I think the main thing that it's important, and I know Mal is probably talking about this today as well a bit. When it comes to commercial lending, pulling a story together is more important, a lot more important when it comes to sort of putting a home loan together. And the main reason for that, which I'll go into a bit later on, is there's just so many more variables when it comes to commercial application, not only in the way you present it, but also in what the bank wants and what the bank's appetite is. So look, when it comes to the 5 C's, the 5 areas that you really need to cover off when you're talking to your customer initially as part of the interview, but also when you're putting this down on paper and presenting it to the bank. You know, you need to talk about the customer's character, and that's important in business lending because, you know, again, so many variables. Somebody's credit history is important, their employment history, their reputation as well. When it comes to capacity as well, you're looking at, you know, their income sources, their other income, their potential income. You know, capital, you're looking at the backup position of the business person, and not only just what they're presenting as their security, but what they've got just in case things go wrong. You know, so what other assets they've got. And this all, you know, doesn't mean that the bank's going to want security over it, but it just really builds an overall picture of the strength of the borrower. You know, then the second last one, we're looking at the collateral. Now, the collateral is the actual security that you're offering, and there's a lot more commentary that's required about the collateral, which I'll go into when you're looking at a commercial loan than you would for a home loan. And just finally, the conditions, and you know, really what a time to be talking about conditions, because normally when I present this, conditions aren't, I just sort of gloss over it. But at the moment with COVID-19, you know, that's one of the issues that all lenders are considering, and it's one of the issues that you'll need to cover off as part of your application to the bank, you know, where the customer stands at the moment. But moving on, just to give you a bit of context around the 5 Cs. So, you know, what I'm doing here in this table is I'm trying to present the difference between home lending and commercial lending. So, you know, in the first row, you've seen that, you know, you've got a home loan, and look, you might present the customer's character, their capacity, their capital, collateral, and their conditions around that particular application for a home loan. And it may fail in one area. So in this instance, this example, I've said basically capital, which might be, let's say they don't have their 5% genuine savings. That's the backup position. Now, normally in a home loan, that'll probably be an automatic decline. You know, and the point I'm making here is that it's a lot more black and white when it comes to home loans in the way they're assessed. And generally, you know, one failure or one policy exception will generally mean that the loan will be declined. When it comes to commercial, however, and I've got 2 examples here, you've got one where, you know, the customer's character might be super strong, their capacity might be strong as well. In other words, their servicing position might be very, very strong, but they don't have the equity or the backup position, and their security position is fairly weak. Now, what I'm trying to say here is that if you can show that somebody's got a lot of experience in that particular industry, they've been there for a long time, they've got a good business that's generating a good cash flow, but they may not have the security there, it's still worth putting it up as an application, and you might find that you might still find a lender that will be happy to support this transaction. Again, I suppose the point I'm trying to make there is that there's a lot more variables when it comes to commercial lending relative to a home loan. And that's why I think this whole presentation is around how you put together your paper. And coming back to my previous slide, you know, you've got to build a story around the strengths and the weaknesses of this transaction. And we'll go into a bit more detail a bit later on. Okay, so the next slide. So commercial submissions and discussion papers, we'll get straight into it. So why use it? You know, why use a discussion paper or a template or a submission? You know, credit appetite for commercial is more subjective than residential. You know, there's a lot more grey, which is what I said before, and there's a lot more policy exceptions as well. So credit appetite as well for most lenders is a lot more volatile and changes regularly. And I think we've all seen that, especially over the last 3 months. But even ignoring COVID-19, you know, I've been doing this for a long time, and you'll find that when it comes to commercial appetite, the bank's appetite does change on a regular basis, probably a lot more than home loans as well. So you need to be across things, and you might say, well, how do I stay across this? Well, it's not easy, you know, and I think really what it comes down to, and why these discussion papers and submissions are important, is that every time you get a deal across your desk, you should be using this as a tool to talk to a handful of lenders and try and get some insight as to where their appetite is at that moment for that particular transaction. Furthermore, what I'm saying in the third point is that there's also no standard rates and no standard fees for larger transactions. So pulling together a paper is really important to get some, I suppose, some detailed feedback and some certainty, so you can go back to your customer about what you're going to be able to offer them. You know, the last thing you want to do is put together a whole application, have it sit in the queue for, you know, a week or whatever, and then the bank come back to you, and you're really just dragging it out for the customer and dragging it out for yourself. What a discussion paper does is it lets you put together a concise synopsis of the deal, and it lets you put it to a lender, and generally what they'll try and do is get back to you, or the BDM will try and get back to you within 24 to 48 hours, just to give you an idea as to whether it's worth pursuing. But also, more importantly, by doing it this way, you know, you're not getting strikes on the customer's credit file, you know, because really what the bank is doing is just having an overall look at the transaction without necessarily treating it as a formal application. But the idea is for them to come back to you and give you some feedback on the transaction. So it's a quick response. They'll give you an indication of fees and rates and charges, and it'll just help you with getting everything together before you lodge the application. So moving on to this next slide. So how do we use it? You know, submissions and discussion papers. You know, provide as much information as possible. So look, if you only have a brief discussion with a potential client, you know, by all means try and get a little bit of information over the phone about the security and type of transaction. But the more you can put into this paper, the better the answer you'll get, and the more detailed answer you'll get as well, and the less variables there'll be, because, you know, the last thing you want to do is put together a paper and get caught out down the track because you miss certain things, you know, and the bank comes back and says, well, yeah, look, you know, we got your discussion paper, but there's a lot of information that we didn't have at the time, and now that we've got it, we're not comfortable with the transaction. So try and get as much as you can. Don't use a spam approach. Once you prepare this paper, don't send it to a number of different lenders. Try and limit it to 2 or 3 lenders that you know and trust. And what you might want to do is maybe, again, pick up the phone and have a chat to these lenders before you go to print, just to get an idea as to who you're going to. Because, as a lender, and I see a lot of discussion papers myself as well, but if there's one particular broker that is sending you a number of these discussion papers over a 12-month period and you're not winning any of them, then you start to wonder whether you're wasting your time actually even responding. So that's why it's important, I think, that you're selective with who you send this to. The lender will look for, as part of your paper, they'll look for the strength of the borrower. So even if you just provide a high-level summary of the customer's SP, they'll look at the purpose. Don't just put down that the customer wants to borrow $1 million. Be clear about the purpose. If they're buying a property, if it's cash working capital requirements, or if they're buying a piece of equipment. Talk about the term sought and the loan structure. Put in some commentary about the security. Ideally, if you can put in the address, that'd be good, because the lender or the BDM will probably have a quick look at the property just to see that they're comfortable. And run a rough serviceability. And you may not want to go through a lot of detail as part of the discussion paper or scenario, but you can at least maybe talk about how profitable the business is relative to their level of debt. That'll give the bank a bit of an idea as to where the customer stands in relation to this transaction. So common errors when it comes to putting these together. So when it comes to smaller applications below 500, probably not worthwhile. Try and limit it to the larger applications. When you're requesting working capital or cash out, requests are not usually sufficiently explained. So make sure you go into detail. It's not like a home loan where you just say, look, customer wants cash out, you don't need to provide an explanation. When it comes to commercial lending, there's a lot more detail that's required about what the money's being used for. The statement of position for principals. A lot of brokers, when they present these discussions, they don't talk about what the customer's position is. All they really do, and there's a lot to come through that really just say, look, we've got a security property in this particular suburb or in this particular state. How much will you lend against it? That's just too generic a question. The customer's statement of position will be important, because the bank's policy might be, for example, that we'll only lend 70% in that particular area. But if you've got a strong individual, they might consider that they'll lend even more than that. They might go to 75, 80, or even more than 80%, just on the basis of the strength of the individual that's going for the application. Another common error, no commentary on the security property. When it comes to commercial, it's not as generic as a residential property where you might have a 3-bedroom residence. You need to talk about the property. Is it a factory? Is it industrial? Is it a shop? Is it an office building? Is it more specialised? Like, is it a childcare centre, or is it a building, or is it an industrial building that has been purpose built for one particular industry? Please talk about that when you're putting up your paper, because it will influence the bank's decision and whether they can support the transaction. When you've got a complex structure, try and get a corporate tree. And you might, if you go to your customer, a lot of them may not know how to put together a corporate tree. And if you've been doing this for a while, you can probably do it yourself. But look, always default to going back to the accountant. And that probably gives you an excuse to talk to the accountant as well. But pull together a corporate tree if you can, in conjunction with the accountant. That really helps the bank. And in that corporate tree, you should list the different entities, who owns what, but more importantly, watch what each entity does as well, because that's important. Another common area, no attempt at serviceability. That's not unusual for us just to get a dump of financials from a broker saying, here you go, have a look at it, what do you reckon? Can you make a deal out of it? What we'd really like to see is for you to attempt some form of serviceability. At the very least, what you can do is extract the profit figure and the add backs. And I'll go into that in a bit more detail a bit later on as well, but just present that as a high-level summary. No tenancy schedule. Tenancies and whether the property is leased or not is really important when it comes to commercial lending. Unlike a residential property, there's no assumption that just because that property's got 2 months to go on the lease, it's going to be released quickly. The assumption actually on commercial is that it's going to take a long time, and a lot of lenders may actually ignore the rent on the property if it's on a month-to-month tenancy, or 2, if it's only got a few months before it expires. So, provide a tenancy schedule. That's really important. And finally, and we'll talk about this towards the end, talk about the policy exceptions. If you see that there's a weakness in a transaction, it really looks better if you're presenting that weakness and you're covering off what mitigates that weakness. You know what, okay, this might be a weakness, but why do you think it's not a big deal for the lender? And the idea is to put that forward early and discuss it and try and provide your counter argument about that weakness, because it takes it off the table, and then the credit assessor can focus on other aspects of the transaction in the application. All right, so let's go straight into this template. So what supporting information do I need for the template? Well, you know, can I put together too much or is it too little? Look, I would say that if it's a discussion paper and it's just a simple high-level document, probably as little as possible. Just try and summarize what you can. But if it's a full submission, you know, again, the more you can put in, the better. But you know, just be careful about putting in too much. We regularly, you know, our requirements at ING are not too onerous, but and we provide quite a detailed checklist. And I think most lenders provide a checklist as to what they want as a minimum. Now, what's interesting is that we get a lot of brokers that don't give us the bare minimum. You know, checklists aren't hard to read, so please make sure you read that and you've addressed everything there. But there are also a handful of brokers that give us too much. And my tip to you is that, you know, as an ex-broker myself, don't put in too much, because it probably can raise more questions. So just try and stick to the bare minimums to what that particular bank wants as part of your inclusions. If available, include the valuation. Again, a lot more variables with commercial lending, and that knocks one out of the park. If you can have a valuation up front, that provides the bank a lot more comfort. If you don't have it, that's fine. Just talk about the property. You know, get some details off the real estate agent. If you've got access to RP data, that's got a lot of information there as well about the square meterage, how big the building is, etc. Or even just Google. Provide some more supporting information to address key weaknesses or risks. So if the servicing's tight, you know, why do you think it's still a deal? If they've got an adverse credit history, let's say they've got a judgment or a default, why do you think that, you know, you can still support this transaction? Or what are the reasons behind it? You know, if there's complexity, provide the corporate tree. If it's a specialised property, you know, provide a contract or the valuation, or maybe just talk about, you know, why you think the bank should still look at the transaction, even though the property may be specialised. And finally, the reliance on rent. You know, if you're heavily reliant on a transaction on rent, make sure you include leases, or at the very minimum, a tenancy schedule. And I'll go through later on what the tenancy schedule should look like. So the better disclosure, the better the quality of the lender response, and avoid just an information dump with no analysis and no assessment. All right, so let's slip into the first page of what I think you know, the application form should look like. Sorry, pull this up again. Here we go. So firstly, cover the background on the borrower. So, you know, talk about their industry background and how experienced they are. That really influences the bank and gives us a bit of a snapshot as to, you know, how good this customer is, because we're not just lending against security, we're lending to the individual, and we're going to be relying on the individual and their willingness to meet the repayments if something goes wrong down the track. So talk about their background, talk about their reputation, talk about their experience as well. Build a character profile. Secondly, the loan details. You know, be specific. For multiple purposes, provide a breakup. And I talk about tables later on, just as an example, just so you can see what that looks like. But justify the motivation for the request. So if they're buying a property, you know, why? Why are they buying a property? Okay, if it's for investment and they're just looking to expand their portfolio, fine. But if they're looking to buy new owner-occupied business premises, talk about why. You know, have they outgrown their current premises? If they're refinancing, why? You know, are they after a better rate? Is the bank giving them difficult terms? Just talk about it and ask your customer the question, because the banks might, you know, in commercial lending, they do ask that question when it comes to refinance, because it's not easy for a small business customer to move banks. So the banks can be a little bit suspicious. You know, if they're investing in the business, what are they investing in? What sort of return do they hope to get out of their investment as well? You know, why do they need working capital, for example? So, you know, look at all those things. Business investment, we've spoken about that as well. You know, you might want to justify those payments by using some invoices or some contracts, or even an accountant's letter that covers off why the customer needs those funds. You know, talk about the LVR and use tables as well. The next page, what I've done is I've shown you an example of how to break up the loan purpose. And again, you know, use tables, and there's a few tables I'll go through in this presentation. But, you know, when it comes to business customers and SME customers, you'll find their requirements are more complex. So rather than just putting a dump of information, break it up in a table, because each loan that your customer wants, so if they want a combination of different business loans, an overdraft, for example, and a home loan as well, you need to break up what the customer wants, including what terms they want as well, and what the purpose is of each loan. So that's a good example there that you can probably copy when you're putting something together for your customer, that where the customer needs more than one loan, for example. Okay, describe the security. So, basic information, the address, the ownership, the estimated market value as well. But the sort of extra information that we need when it comes to commercial property, relative to a residential property, the type of property, which I mentioned briefly before, the land area, how big the building is, whether there's an office space and how big the office might be, the parking spaces there, they all influence the value of the property. The zoning is also important as well, because what the bank is looking for there, they don't want a mismatch. If you've got a commercially zoned property that's zoned residential, that could cause problems. Same with, on the flip side, you've probably seen on home loans where you might have a residential property that's zoned commercial. Some lenders will question that and may decline an application if they're not comfortable with it. Finally, the tenancy details, and I provided a schedule down below as an example. And by all means, you can use this as well for yourself. But what we're looking at, the highlighted areas in orange are critical. The other areas, look, if you've got it, great. But if you haven't got it, it doesn't matter that much. But break up the details of the units or the property. The gross rental, make sure that gross rental excludes GST, and we'll talk about that in a second. The outgoings and who pays them is really important with commercial lending, and it can influence how much you can borrow against that property. So where you'll get that from is the lease. And what that shows is that how much in the outgoings is the landlord recovering from the tenant as part of the lease. So there's a breakup there. Who the tenant is, the lease expiry, again, that's critical. The term remaining, and whether there's an option. Now, the option is really important as well, because, when it comes to the term of the lease, it's not a given that you're going to get 15 or 20 years. If you've got a number of short-term tenancies and the property is heavily reliant on rent, not the property, but the transaction, the application is mainly relying on rental income, rather than the business income, then the bank may shorten the term of the lease because of the term of the loan, because of the fact you've got a number of short-term tenancies. So anyway, use it as an example. I think that's a good example of how you can break up the tenancies. Common tips and errors when describing property. I'm surprised how many times we get applications where the legal ownership details are incorrect. So you might have a trust and the broker might just put in the trustee company, or you might have the wrong company name altogether, or they might just put in the individuals, but it's wrong. So please make sure this is correct, because who owns the property is important to ascertaining which guarantees the bank needs. Check the zoning. Again, I've mentioned some lenders have restrictions. Look at the length and the quality of the lease. It's critical. A lot of brokers don't even talk about the lease. Check the rental return relative to the value of the property. If you've got a property where you're getting a really low return, and when I say low, let's say below 2 to 3%, then just be cautious of that, because a really low return could mean that it's a potential development site. And that may not present a short-term problem, but some banks don't like development sites and they may value the property down. So just be cautious of that. When quoting the rents, as I mentioned, exclude the GST and make sure you break up the outgoings and who pays them. Now, I just wanted to show you an example of what the GST and the outgoings can influence when it comes to serviceability. So I'm using $100,000 in rent here, and what I'm showing is that in the first example, the broker assumes that $100,000 is exclusive of GST and that the tenant pays the outgoing. So what that does as a bank, it lets me use the whole $100,000 for serviceability. Now, assuming a 6% assessment rate and 1.25 interest cover, the maximum loan is really good. It's 1.33 million that we can lend you against that rental income on its own. Now, when the broker gets it wrong sometimes, they put the $100,000, but it includes GST. And they also don't identify that the actual landlord's paying the outgoings here, which further reduces the rental income from that property. So in this example, once we exclude GST and we scale the rent at 85% because the landlord's paying the outgoings, then it really pulls down that rental income and the maximum borrowing capacity drops by about $300,000 here. So that's why it's important just to be careful when you're quoting rent, that you're differentiating GST, you're excluding it, and also who pays the outgoings as well. Finally, other security. Talk about associated companies and trusts. You want to bring that up. You want to talk to your customer before you present this to the bank about what other guarantees you're offering, because the bank may come back and want to tie up everybody, and that may be a real issue for your customer. So make sure that you list the associated guarantees that you're offering. You list which personal guarantees you're offering as well. And finally, the GSAs, which is the old fixed and floating charge. But the bank's going to want to take a charge over the entity that owns the property as a minimum, maybe even the trading entity. If your customer doesn't want that, you need to talk about why you don't want to be offering it, because it may kill the whole deal. So common tips and common errors, one, vet the trust deed. That's important, and make sure you send the trust deeds up front to the bank, because what the trust deeds does is it confirms who the beneficiaries are, and that way we know which guarantees are going to be involved in the transaction. Consider the directors and who the shareholders are. Consider associated entities, which I've covered up before. What is a GSA? Look, a GSA is a charge over a company or a trust. And what that charge does really is, it really just gives the bank control. They want to make sure that if something goes wrong, they can basically, act on their security straight away. And sometimes when there's a GSA to another entity or to another bank, it may delay how quickly the bank gets to take charge over their particular security property. If another entity appoints a liquidator, for example, then the bank may have to wait, and they don't want to do that. Finally, what guarantees do you want to exclude and why? Talk about that. Okay, statement of position. Make sure you include that and talk about it. List the assets and liabilities, the property details, the bank details, for the debts and balances and their limits. Common errors. If multiple properties, again, use a table. Don't mix personal assets and company and trust assets. And SP should only list their personal assets of the individuals. Same with their liabilities as well. Should only be their personal liabilities. The rest will be broken up in the financials. Okay, just moving on to the next slide. Serviceability, attempt it. Provide a spreadsheet, even if you just list the EBITDA, which is, the profit after add backs and before tax, and the net rental. Just show it, list all the add backs, and use a table to break it up. Then under that, list all the debts. Again, use tables, calculate the interest at the assessment rate, and that will show the bank the difference between the income and the interest expenses, and it gives them a bit of an idea as to where you're at. I think some of the other presenters today may talk about interest coverage ratios and how they work. But if you just list that out, the income just from the P&L and the commercial debts, that's a great starting point. So tips and common errors, be cautious when adding back expenses paid to associated entities. The bank might just say, we're not going to add that back. We actually need the financials of the associated entity that's getting that add back. Rental income a lot of the times may not be calculated properly. Just be careful, because historical financials might show historical rental, and the rental may have actually gone up. So you might want to make adjustments for that based on the current lease and what the current rent is. And make sure you use the actual rate used for calculating interest. Make sure you've got that correct as well. Finally, and I think this is a couple of slides to go. Key risks and mitigants. Critically assess the background of the borrower, their business, the quality and security, the guarantees, the SP, and how strong servicing is. If you've got some concerns, list them out, but talk about what mitigates those concerns. And finally, confirm your support of the transaction. Highlight any conditions that the client might be happy with, and they might be obvious ones. They might be buying a property and you want to just put it up and get an indicative approval subject to valuation. Explain that. If you don't, the bank might come back and say, well, we're not going to look at it unless we get a valuation up front. So just talk about the obvious ones and talk about why you're supporting that transaction. Look, I think I've doubled up on that final slide. But look, that's it for me. Thank you for taking the time and listening. Look, I'll hand it back to Peter now, but just keep in mind that following this session, you'll get an email from Mariah, and in that it'll have just a link where you can come back to Mariah or email Mariah back, really, and just confirm any questions you've got in relation to this presentation. There'll be a panel session on Friday where we'll be addressing a lot of those questions as well. So thank you for your time and enjoy the rest of the day.
That was great, John, and I think most people will learn a lot from your hints around submission writing in these particularly troubled times. All right, let's go to our next speaker. It's Donelle Brooks from Land. They're the platinum sponsor. And Donelle's going to be looking at alternate lending. Take it away, Donelle.
Thanks so much, Peter. And John, it's lovely to hear from you again. And it's certainly really, really important, to understand what submissions look like and the tweaks that are required with the COVID effect. So, and we're seeing it even in the alternate industry. And today I really want to touch on, the private lending and the unsecured space and just give you guys some tips about what's actually happening in the industry. So thanks again, John, and let's move into alternate lending with COVID-19 effect. So look, why businesses use the alternate commercial lending market? We know that it's because financials are not up to date, ATO debt, speed of funding, flexibility of payments, term flexibility, multiple loan purposes or product combinations, and credit impairment. So we know that there's a lot of inconsistency in credit reporting, and so we find that alternate lenders are really happy to see and listen to the story in the credit file rather than always just relying on a band score. So the top 8 SME products, and you can choose your product type that best suits your client. And that really speaks to, I guess, what we've heard from some of our presenters during Masterclass is around really understanding your client and their story. So are they seeking equipment and asset finance? Is it invoice or trade finance? Unsecured short-term loans or secured? Private lending, line of credit, overdraft facility, and the merchant cash facility. Now, we've all spoken about diversify or die, as opposed to the new buzzword, which is let's pivot our business. So while you're pivoting your business, how do you attract clients? So for our brokers who already work in the resi space, lots of your clients are business owners. Get this text message out that you can see on the screen. Get an email out. Let your existing base know that you've got this finance on offer. Really, really important. Tap into your other professional alliances, accountants, financial advisors, insurance brokers, planners. Those alliances of yours are visiting and talking to business clients every day and also understand their pain points as to where finance may help them. Get yourself a dedicated landing page. It's not as expensive as building a full website, but get a dedicated landing page where you can direct traffic, direct emails, direct phone calls, direct inquiries. Really important. And last but not least, get on socials, get on LinkedIn, get on Facebook. Let your social network know that this is something that you now offer. So let's have a look at private lending and the COVID-19 effect on private lending. So there are 3 main reasons why someone would seek private funding. And basically you're looking at partially complete developments. So either the lender or the funder has run out of cash. You're looking at development funding, so construction or land subdivision deals. So options are available for no pre-sales, but pre-sales are actually preferred, but there are a few lenders who will do it. And then just typically your short-term lending requirements. So this could be for lots of reasons, whether it's a startup, purchasing an existing business, a stock purchase, expansion, bridging finance, all the typical short-term lending purposes, but we're using property as security. So let's have a look at some tips that we think are really important to take into consideration when getting the client story. So property prices are unknown as to how much they're going to drop. So that means that LVRs are definitely reduced from lenders. 65 to 75 is where you'll find resi sitting, 50 to 60 for commercial and 50 for rural or land. Population and location is extremely important, and I'll touch on that in a second. And also about specialised security, and we'll touch on that too. Docs required really depends on the complexity of the deal, and exit strategy is super important and always required. Just remember that traditional cash flow lenders offering property security deals still require the ability to service as opposed to just focusing on the equity and the exit strategy. Cash flow lenders are still looking at that ability to service. So to finish up, I want to talk about location and population and specialised security. So really, really hard when the population is low. And the reason why in these tiny towns and hamlets, obviously the population is low, but it's almost impossible to appraise the property as there tends to be hardly any comparable sales. And this makes desktop values extremely difficult. Specialised security, wineries, horse studs, etc., they're difficult to lend against, as it's nearly impossible to get a true handle on the property value without doing really slow and expensive full vals. So 50% LVR is where you can feel quite comfortable when it comes to specialised security in private lending. So they're the private lending tips to take on, and I know I'm moving fairly quickly, but you will have access to all of this information after the masterclass. So let's talk about unsecured lending, and we're going to go through the same things. So the first thing at the moment that's important is industry. So there's 3 ways that you can class your client, I guess, when you're getting that story and that profile. Are they a gold client? Have they maintained steady cash flow? Then they're a big tick. Are they a silver client? Have they maintained some sort of cash flow, at least a minimum of 50% of their pre-COVID sales, and they've continued to trade, whether they've pivoted their business, into takeaway or hand sanitizers or face masks, or whether they've just been able to trade but affected. There's a little bit more scrutiny from credit on those deals. And unfortunately, bronze deals are the ones that are hardest to get across the line. So whether that's industries that have been fully impacted with no lockdowns and absolutely no trade, but have expected to return to full trade. They're hard to get across the line, guys. They will get funded, but expect there to be a lot of scrutiny. So we've spoken about private lending, we've spoken about unsecured, and I guess now what we need to do is talk about the SME guarantee scheme. So currently on the Lend platform, we have 4 lenders offering the SME guarantee deal. It's not for everyone, but please know that Lumi, Prosper, Muller are all offering the service. So let's move on to the Lend platform. We know that it's the fastest and most sophisticated platform for Australian business brokers. It automates the process of matching a lender to a SME and uses a really sophisticated combination of AI and analytics. We know it's the all-in-one platform is probably one of the biggest features. Single app, instant analysis, best lender match. Choose the lender to send the app to. If they're unable to help, same application form, same bank statements for the next lender. Real-time status updates, end-to-end deal flow, serviceability calcs and CRM tools, and the process doesn't impact the client's credit file. So when we have a look at the magic of Lend score, which you may want to know, and this comes with our bank statements technology and you get free access to it, and it gives you a score on the likelihood of your customer's loan being approved. Really great piece of technology, and you'll get to see it in play when you join the platform. And here's a couple of snapshots of the analysis. So there's a lot that's in this, and I'm just showing you 3 quick slides today. So there's decision metrics, revenue charts, day and balance charts, expenses, etc. So here's a quick look at the monthly revenue chart and the day and balance chart. So there's some great bank statement technology which can be a really good advice piece when talking to your clients. So last but not least, Lend size is where we automate based on the information that you have given us through our profiling that we've done, the lender and the amount that they will consider when looking at your client's application. So again, understand the story. The platform will help you find the right lender. And just to finish up today, guys, just want to touch on the Lend ED series. Really important. You'll hear from all of these lenders about all of their products, and there's no ifs, buts or maybes. It's the real stuff. Who they're writing for, who they're not, and what pain points the clients are facing. So you'll get all of this information from the LendED series, understanding, insight, answers, clarity, which in turn will improve your conversion and increase your commission. So you can reach out to me to get access to the platform, and we're very grateful to the FBAA for giving us CPD points for each episode that you watch. So thank you so much for your time, and thank you for putting up with my technical difficulties. They weren't too bad. I think I've had worse this week, but thank you so much for your time and taking the time out to participate in something that is really, really important right now. Thanks so much, and back to you, Peter.
Well, thanks, Donelle. Some great observations around alternate lending. Now, of course, John, with his submission writing, particularly with the challenges of COVID-19, once again, really, really important observations. Okay, let's talk about Thursday now. First topic up will be asset finance and SME unpacked from Get Capital. Then shifting your business to utilise today's advanced technology for best practice in commercial lending. Lend will be responsible for giving us those insights. And finally, assisting yours and your borrower's cash flow with Speedy Finance. Well, as advised previously, please jump on to the FBAA website and click on upcoming webinars to register for any other sessions or the live panel session on Friday, which I'll be hosting. Thanks again to our platinum sponsor Lend and our MC sponsor Speedy Finance. Without you guys on board, this wouldn't be possible. You'll be getting the presenter's contact details in an email following their session, so get in contact with them for more info. And if you have any questions, don't forget to email them to Mariah, and they'll be answered on Friday at the live panel session. There is the CPD code that will be provided in the follow-up email, and a short survey to complete with your feedback, so please take the time to fill this out. Thanks again, everybody. Enjoy the rest of the day. I'll talk to you tomorrow.